Welcome back. Well, we're looking at the market, which was a little subdued this Friday morning, but we've got plenty of earnings to go over. And another good set that came in was from actually Titan. In fact, if we talk about the Q1 performance, it was a pretty decent quarter. Margins have been looking stellar, and the watch business is also growing. In fact, if you talk about the overall revenue, then an increase of about 21%. EBITDA margins at a 34.8% coming in, improvement in the gross margins as well. We have Mr. Ashok Sonthalia, Chief Financial Officer at the company, joining in to take a couple of questions. Mr. Sonthalia, thank you so much for joining in. So, first things first, let's get, your pulse check. Now that we're entering festive season, we were just discussing this, right? It starts off with Raksha Bandhan, then Ganesh Chaturthi, and then the full-blown season. What's your sense of demand, sir? I mean, let's talk pure jewelry business. What are you gearing up for as we enter the festive phase?
Of course, Surabhi, we are quite excited and looking forward to it, but we cannot ignore the kind of volatility which gold prices are exhibiting, and if you have picked up today's news again, that the whole global supply chain from Swiss to US has been, so every day there is a new thing, happening, and which keeps buyer growth for gold jewelry under check. They are quite flattish. And that's a little bit concerning for us, that while we are doing everything to experiment with 18 karat, 14 karat, and CaratLane even doing 9 karat gold to keep the price point for end consumer more affordable. But this volatility has to stabilize, because any volatile environment keeps consumer sentiment.
No, sir, could you complete that point? Are you saying that demand is subdued so far in the second quarter? Are you expecting it to be a slightly more subdued season then because of the volatility? And you're saying you're doing everything. You're experimenting with even 14 karat, etc. But are those experiments working?
So of course, through the price point and ticket size, we are able to deliver growth. And on that, we don't have doubt. We would, of course, like buyer number also to grow, which is not happening, which is happening in the studded. And July month, because we had our diamond festival started early. So July month has been doing well as far as diamond jewelries are concerned. And to that extent, gold is still finding favor from the investment point of view and adornment point of view. But buyer growth is muted at this point.
So if I ask you like to like, as we get into, because Q3, there's no point saying Q3 or Q2 because the season keeps moving. Yeah. As of now, the visibility that you have, like to like, festive season to festive season, how much growth are you expecting? 15, 20, less, more? We're just trying to get some sense.
Mid-teen seems to be okay. It can be slightly better. We don't know yet. But we think mid-teen should definitely be possible.
Mid-teens. Okay. What about margins? You expanded your jewelry margins to 11.5%. What led to that? And going ahead, given all that we spoke about in terms of uncertainty, what is the expectation on how margins will play out? Because even the buyer growth in gold, you said, has been a bit subdued.
Yeah, so margin performance had one-time benefit in quarter one. We called out 50 basis point, which will reverse itself in quarter two and quarter three. But as far as overall margin is concerned, our guidance on jewelry domestic business has been 11 to 11.5 for Titan standalone basis. And that guidance we are still maintaining. But at the same time, I must point out that growth, market share gain, customer acquisition is at this point of time highest priority. And for that, if some tactical call have to be taken, we would not hesitate in taking that. And if that means that margins slightly go, instead of 11, 10.8, that's okay.
So there could be a downward bias to your margins. Your guidance is, aspiration is 11 to 11.5%. But, given the focus...
has to be taken, we will take some calls because growth is far more important at this point.
Okay. So focus on growth over margins.
All right, Mrs. Sonthalia, hi, good to have you, Ben. Tell us about the acquisition of Damas. You'll have done 67%, I think, for a value of around 2,400 crores. The last year, it did close to around 3,400 crores of revenues. What is the scaling up of this business? Say in the next 2-3 years, where do you see this revenue number headed? Point number one. And when you purchase the remaining 33% stake, at what valuation will it be at?
Okay, so the 67%, yes, we have purchased, and we are kind of repivoting the brand to more Arab customer focused brand. Right now, it has both Arab as well as Southeast Asian, Indian, and kind of so that repivoting, Nigel, for next 12 to 18 months, some restructuring of the network, etc. Will kind of after that this should grow. Currently, they have high single digit to low double digit growth rate in the past. But next 12 months, I see some readjustment happening. But beyond that, double-digit growth should come. UAE as a territory is doing pretty well. Saudi Arabia, where a lot of social reforms and economic developments are happening, that's the another important market for the mass to grow. Yes. And we believe double-digit growth should be coming. As far as next 33% after 4 years is concerned, it's a profitability-linked complex formula, will completely depend on performance. So at this point of time, very difficult to kind of put a number to it.
What EBITDA does it do?
Right now, it is just low single-digit number. Just has positive territory. That's it.
Okay, and obviously you'll be looking at scaling it. As you grow in this double digits, you'll have an aspiration to take the margin to double digit.
Certainly high single digit to low double digit. It's some work has to be done, Nigel, and I think we have a lot of synergy on the sourcing, merchandising, retail operations. So in a combined ecosystem between Tanishq and Damas, we see a lot of value accretion possibility.
Next 3 years, Damas could be nearly 5,000 crores of revenues with high single-digit margin. That could be the aspiration, right?
Okay. Yeah, we have not yet finally penned that down, but that seems to be very reasonable.
So your watches division margins were quite high this time, 22%. But I believe there is some one-off inventory gain. What are the adjusted margins? And do you think you can, you're given a guidance, I think, of 18 to 20% on margins for watches. Does that stay, or do you think you can push it higher?
So adjusted margin for Q1 for watches is about 18%. 400 basis point one-timer is there. We had guided about 12.5 to 14.5, Sonia, if you remember. But we think that FY26 will be slightly better than that, maybe mid-teen. Because again, this 4% will reverse in Q2, Q3, and Q4. Because when this inventory gets consumed for sales, this kind of will hit P&L. But it's not a very, very large number. So we still mid-teen EBITDA number from watch division is certainly possible.
Okay. All right. So we'll leave it on that note for today. Thank you so much for joining in and giving us some perspective on the business. And we look forward to more conversations down the line.